You may have noticed that I haven't published any videos or online classes in a while. That's because we've been building something really special and really important. It's centered around a bold idea. What if we could automate real supply and demand zones for everyone so they were easier and faster to find? I'm going to tell you a little about it after today's important lesson on fair value. But it's coming soon, and you can be first to get all the details at pindex.com/priority. So make sure you sign up. Now, let's get started with today's lesson on fair value. During this session, we're going to talk about fair value, the true magnet for price. I'll explain exactly how that works. We'll talk about why some supply-demand zones work and others don't. That's always a question that people have. And what if we could identify big imbalances faster, objectively, and across all markets in real time? More on that later. First, it's important to go back to basics for a moment and understand how and why all this works. Exactly how and why do prices move in markets? Remember, the stock market, for example, right? Stock market buy and sell decisions are based on two things: human psychology and the laws of supply and demand. And they're on display each and every day on our price charts. Given that these two ingredients never change over time, the chart pattern that represents this is the same today as it was 100 years ago and will likely be 100 years from now. If we take a look at the 1920s, the Dow in the 1920s over there on the left, the 1950s, the 1970s, and more recently, we can see the picture always looks the same. Of course, details matter. Proper rules are key. So let's dive into this important topic. All right, let's start with fair value. In the middle. So what is fair value? Fair value is the price level where the majority of buyers and sellers in any market agree to buy and sell. It's where the majority of trading activity takes place, or the majority of volume, however you want to look at it. And again, it's where the majority of buyers and sellers agree to buy and sell. Price efficiency, in other words. Think about any item you buy at the store, food, right? So a food item that you've been buying for years. You generally know what the average cost of that item is. You also are aware of when it's a little expensive or a little cheaper. But generally, there's probably a price level that it's at most of the time. And that's efficiency, that's fair value. But how does price end up there so often, right? Fair value pulls price back to it. And here's how that works. Sometimes something happens in a market and prices go up. They will reach a level always where supply exceeds demand. Competition to sell at supply naturally pushes price lower, right? When supply exceeds demand, price must move lower. That's how supply and demand works. Just like other times, price in a market goes down. It eventually reaches a level where demand exceeds supply. Therefore, competition to buy at demand naturally pushes price back to fair value. So you have the natural forces of demand and supply pushing prices back to fair value. And because fair value is the price level where the majority of buyers and sellers agree to buy and sell, fair value naturally pulls price back to it. Now, when we think about this, it sounds like we're talking about markets that are always generally moving sideways. That's not at all what we're talking about. The way we look at markets is some people just look at uptrends, downtrends, sideways trends, things like that. The problem is those are typically only clear and evident after they happen, right? You're buying after a rally in price, selling after a decline in price. Instead of looking at markets like that, you may want to consider how markets really work, supply, demand, and fair value, and consider that this supply, demand, fair value relationship or equation is sometimes moving sideways, often it's moving up, often it's shifting down. But it's this whole supply, demand, fair value that keeps moving, right? Let's go take a look at some recent examples in the market. The screenshot on the left is from one of our recent live trading sessions with our members. And when we look at supply and demand and fair value here, we see that right in the middle, fair value or price efficiency, where the majority of trading activity took place. Above that, we have our qualified supply zone and our qualified demand zone below it. Right? What happens a little bit after this session, something happens in this market. This happens to be the market for Ethereum. This is a cryptocurrency. We'll look at a bunch of different markets here. But it doesn't matter because behind the scenes, it's just people making buy and sell decisions. Something happens in this market. Price shoots higher, reaches our objective supply level. Remember, competition to sell at supply naturally pushes price lower. Fair value, being the magnet for price, pulls price back to it. A little bit later, probably some more good news on Ethereum comes out, causes people who buy on news to start buying. That brings price right back up to a price level where the chart already strongly suggested supply exceeds demand. Again, competition to sell at supply pushes price lower, back to fair value. This is the most likely outcome for price when we have a supply zone above fair value, demand zone below fair value. Let's keep going. Here's another one. Now in this one, I want you to notice, let's add something to this. And this will speak to probability of any trading opportunity or long-term investment. Take a look at the screen here on the left. This is when we were setting up this opportunity with our members. We have supply, demand, and fair value right here. Notice the distance from fair value to the supply zone above. Kind of pointed it out over here on the right. That's quite a ways away. Okay. What we're focused on here is the opportunity, potential trading opportunity, risk, reward, and probability from the supply zone back to fair value, because that's a pretty high probability move when we have that. Something happens in this market. This happens to be an ETF in the stock market, but that doesn't matter. Price rallies up to the objective qualified supply zone. Competition to sell at the supply zone is strong. That quickly and naturally pushes price back to fair value. Now, in this case, notice price just touched the supply zone and pretty quickly fell back to fair value. Well, if we look over here, there was a strong move away from that area. Here it's a gap. When we add pre and post market trading, we see it's not 100% a gap, but still a strong move away. The stronger the move away from that zone, typically the larger the supply-demand imbalance up here, right? So it's no coincidence that price just touches the level, and then because fair value was so far away, that opens up a nice, quick, and clear profit zone. The key, though, is making sure we know where fair value is and that distance to our supply zone above or the demand zone below. Here's another one. Want to point out that same imbalance concept we just talked about. If you look at the chart on the left, notice the little demand zone here and the strong move away. and also where fair value then develops. It's right up here. So now we have our distance, we have a demand zone that likely has a big imbalance in it. Fair value all the way up here. There's a high probability trading opportunity setting up right here with this picture. Now, there's a couple other things that we look at with this. We'll talk about that in a few minutes. But this is key. Notice price just comes down and touches the demand zone. Competition to buy at this large imbalance demand zone pushes price right back to fair value. And then because of the large profit zone we had with this opportunity that you don't see on this chart, price ended up moving about 3% in 2 days. And this is the whole NASDAQ. This is the NASDAQ market, right? This happens to be the NASDAQ futures. You could take this trade in the Qs. Either way, what are we focused on here? Human psychology and the laws of supply and demand. All right, let's keep going. Now, I want to add another thing here that will, remember, we want to leave these videos and these sessions with a much stronger skill set and more confidence than when we started this session. So let's do our best to do that together. Remember, when it comes to supply, demand, and fair value, it's not this just sideways trading range. Notice here, supply and demand and fair value, the range was here. Then it shifted lower to here. Then this supply, demand, fair value range shifted again, right? And that's what we focus on. Now we have technology that helps us see that. We'll talk about that in a moment, but let's take a look here. So this supply, demand, fair value range in this market, which happens to be the Aussie dollar against the US dollar, is shifting lower. We recognize that, and we don't try to overthink it. We don't try to change the forever laws of supply and demand and how all that works. And people don't really change over time, right? People are people and how we make decisions. So we stick to the foundation basics. We recognize fair value or price efficiency down here. Our objective supply zone is above. Notice price here touches the zone and shoots right back down to fair value, suggesting a big imbalance in this area, which is what we'd expect location-wise. A little bit later, some other news comes out. The Aussie dollar moves right back up to the supply area, and the distance between fair value and supply is pretty big. Price then quickly moves right back down to fair value because this is the true magnet for price, right? And it's this constant governing dynamic at play of supply, demand, fair value. Competition to buy and sell pushing price back to fair value pulling price back to it at all times, right? All right, let's switch gears here and let's talk for a moment about why some supply and demand zones work and others don't. If we look at these zones, we have 5 demand zones here. Strong uptrend in price. Some people look for that. We don't focus on that. And I'll explain that another time. Pretty good structure zones here if you're just looking at the zones themselves. Here we have some zones on top of each other that often suggests a big supply-demand imbalance in the area. We also have 2 demand zones that have gaps with them, also suggesting a big imbalance in these areas. So some questions. Are these 5 zones or 1 or 2 of them high probability? Do they even qualify any or all of these zones? Would you buy at these demand zones or any of these demand zones? Maybe think about it for a moment. And remember, here's a checklist of items that go along with the original supply and demand strategy. Let's take a look. All these zones fail. Price doesn't turn at any of them. There's a reason. There's a couple reasons. Right? The big one is where these zones are located in the big picture. One of the biggest mistakes that people make that I've seen over the many, many years is they see a pattern of rally-based rally and they think that's a qualified demand zone. They see the pattern of drop-based drop, they think that's a qualified supply zone. And that is not the case. Right? We have to, sure, at the time these rally-based rallies were created, that happened because of a supply-demand imbalance in this area, right? Even here, price only goes up from here, creating the rally-based rally because demand exceeds supply at the level. But the key question is, how big is that imbalance? At the time, there was a little imbalance there. That's why price went up. But is there a big enough imbalance to turn price when it comes back to it? That's the question that most people don't focus on. These are not all created equal by any stretch of the imagination, right? Anyway, today and now going back years, for us on our team, we focus on data-driven decisions. We test everything. We look at everything. I can go on and on and on around how important it is to quantify real supply and demand in the markets, looking at all the factors that we look at. So the big point here is be careful. Just because you see a rally-based rally does not mean that that's a qualified demand zone. Just because you see a drop-based drop or someone telling you that's a supply zone, it doesn't mean it's a qualified supply zone. Let's take things a little deeper here, and I'll start to bring a little bit of technology thought and data-driven information into the equation here. So this is a deeper visual of what we saw earlier, and what's coming after this is important and ties into all this. Why is this trading taking place here? Why are these pivot highs here? Why are these pivot lows here? It's because below this, the supply-demand imbalance on the demand side is so big. Right? The reason these highs are here is because above this, the supply-demand imbalance is so big on the supply side that you don't get trading above those highs. Right? Remember, this column here, sell orders, buy orders, this is potential volume. These buy and sell orders haven't been filled yet. They're sitting there. The result is the actual volume at those same price points. And that's why you're always going to see the vast majority of volume and trading activity right in the middle. It's the large amount of supply and lack of demand up here that's keeping prices down. It's the large amount of demand down here and lack of supply that's keeping prices up here. And this whole equation shifts higher, shifts lower, could keep shifting higher and higher and higher. But to buy and sell properly in that means we need to focus on this ongoing governing dynamic and the rules around it. Now, all of the components to this, it's with today's technology, we can look at all that. We can look at it objectively. We can look at lots of data. We can test everything. And we do. Let's take a look at this one, and we'll start to bring some of that into this. Here's another recent example from our live trading sessions with our members. Here we're looking at coin. This is a stock, Coinbase. So we had price fall a little bit from a supply zone, and look at the range here. Here the range is starting to shift lower. Over here, take a look at this range. It shifts higher. There's a demand zone near the origin of that shift. Right? This is the demand zone. This is when we set it up in a live session with our members. This is the result. By the time, what I'm about to tell you, we didn't know back here, right? But we can anticipate this because this just keeps playing out over and over and over. In fact, we could be looking at a chart here of a stock in the 1920s. We're not. We're looking at Coinbase in 2026, but it doesn't matter. We'd still be having the same conversation and the chart would look the same. Right? People and how they make decisions, the governing dynamics of supply and demand, they don't change. What's changed is technology. And we use technology to make things happen faster, make things better. By the time price came down to the demand zone for coin, notice where the current fair value area was. It was all the way up here, creating a really healthy and nice risk to reward scenario for this opportunity, and of course, very high probability. When price came down here, again, competition to buy at demand caused it to turn and pushed it higher. At the same time, fair value being all the way up here has the natural tendency to pull price back to it because, again, fair value is where the majority of buyers and sellers agree to buy and sell. Another question I've gotten many times over the years is, well, once you have a pullback to the demand zone here, can we buy it again and again and again? How do we quantify that? How do we have a high probability rule around that? Well, again, with technology of the last few years, we can test all these things. And we do. Let's take a look at some of that testing. And I'll show you. Some of you know, because maybe you're in our sessions or you've watched maybe another video from the past, you know we use the rule of 50%. In other words, once price moves 50% or greater into a zone, that zone is done. We don't use it again. Now, that's not equal on the supply and demand side in the stock market, but more on that another time. Take a look here. Here's some results from a test on zone penetration. Notice at the bottom here, the 0 to 10%, 0 to 10, that's 0 to 10% penetration into a zone, 10 to 20, 20 to 30, 30 to 40, and so on. Notice the win rate, the shallow penetration into a zone, right? The greater the win rate compared to the losses. Right? Shallow pullbacks, still a big imbalance at that zone, price more likely to turn. As the penetration levels get deeper, as we move 10 to 20% into the zone, 20 to 30, notice the win rate is going down, the loss rate is going up. Right? Once we get to that 50 to 60% penetration mark, notice the losses now start to become greater than the wins. Now, you may want to, doesn't mean you have to have the 50% rule. You may say, you know what, I want to keep things as high probability as possible. My limit's going to be 10 to 20%. Does that make sense? This test was done with about 74,000 zones. And again, this is one of just tons and tons of data-driven decisions that we can make and we do make. We believe what's coming next will change how people identify opportunity in the markets. We're excited about what's coming next. Think real-time zone identification that automatically helps you spot the low risk, high reward, and high probability trading opportunities. We've revolutionized market timing with our zone intelligence technology. As I said, I've been away from videos and all online education, all that for a while. We've been building. We have a great team, great coders, and zone intelligence is where it's at. It starts with the technology looking at all the world's supply and demand in real time. Running that supply and demand through the zone intelligence algorithm, figuring out the algorithm, then spotting the price levels where we have the biggest imbalances, which is where price is most likely to turn, which also allows us to measure true profit zone and everything that comes along with that. The display is what you see on the right here. Now, we haven't released this yet, but here's a simple screenshot of it. This is Apple, going back a little bit, coming into one of the zone intelligence big imbalance areas. telling you when the entry is, and then hitting profit targets. Those are the green little boxes on the way up. It's just a small little screenshot. It really allows for hands-off market timing made simple. And again, the zone intelligence aggregates global supply and demand data across all markets, delivering probability-driven, actionable market timing. Right? The goal is giving traders and investors a decisive edge to help maximize profitability, mitigate risk, which is very important, and take action with confidence. Looking back 2-3 weeks ago, the platform had Apple coming into supply, giving an automated entry with automated targets as it fell. Notice fair value here in the middle. More on the platform. This is just one small screenshot of a very robust platform. The week before had Apple coming down into a price level where demand greatly exceeded supply. Competition to buy had turned shares of Apple higher, hitting targets on the way up as it moved through fair value on the way up to supply. It's all about clarity, control, and confidence. And this is just a sneak peek, a small part of the platform. We've been using this for a while. It all started way back on the trading floor back in the 90s for me, developing the strategy. Then moving over to price charts over the years and really bringing the strategy to life, sharing it with people around the world for many years. And now, the last few years, we're all aware of how fast technology is advancing. AI-powered everything. That allowed us to really take advantage of all of that and build our proprietary zone intelligence platform. But keep in mind, the foundation has never changed. The technology has evolved. Right? Same purpose, better tools, stronger edge. I'll be back next week to share a first look at our new platform. I'll show you how it helps traders make the right trade at the right time and why we call it the next generation in trading and investing. Join the priority list at pindex.com/priority for all the details. See you next week.